Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, February 20th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Welcome back. Here's a look at the ES in the daily time frame right here. Currently pushing down a bit here. Friday's highs with a push down and leading to further weakness here into the RTH Open. Again, very bullish overall trend to begin the year. Very clear trending market. Each of these pullbacks here leading to new highs for the most part here until just recently, where this pullback did not lead to a new high, and instead we're now trading right at 5,000 here within this little range. Again, this market continues to show overall bullish trending qualities, continues to show an ability to push out of the bullish PIMA trigger zone here, which is between the 8-period PIMA and the 21-period PIMA. And anytime price pushes into that zone, it could be an opportunity for bulls to defend and push this thing to new highs. Now, a failure to hold the 21 or close above the 21 here, close below or close above the 34, for example here, all of this would start to break the trend. Doesn't necessarily mean it has to drop, but it could start to mean that this thing goes sideways and the uptrend sours. Until then, right now, this market continues to remain bullish overall. And in the very near term right here, price, especially on an intraday basis, able to recover the 5,000 level after dropping into the 49.94s this morning. Overall, if price can continue to hold this area, we could see another round of strength until proven otherwise. We do have the FOMC key level below at 49.13 half. At some point, we may need to go get that. It's a naked level here after rallying away from that level, and perhaps needs to be tested at some point. We also have year-to-date VWAP down there as well. It's been an uptrending year-to-date VWAP. Bulls have defended that level. It's been a little while since we've tested it. Perhaps a pullback into that zone could be seen ahead. But even if so, it could be an opportunity again for bulls to defend until proven otherwise. The major failure point would come at about 48.50. 48.50 right here, the top of this previous market structure. A failure in that zone would open up more weakness, but until then, any pullback, even as deep as that, could still be a buying opportunity down the road. Again, as we say, until proven otherwise. If we take a look here at the NQ, down about 0.4%, looking very similar to the ES. The recent pullback did not lead to new highs, and that could lead to a bit more weakness here in the near term. You have the lower FOMC key level down here that has yet to be tested, and we also have a rising year-to-date VWAP as well. Will we see that zone here sometime this week? If so, again, it could be an opportunity for bulls to defend and keep the party going to the upside as this market remains within a very clear uptrending channel. Now, a major failure comes right below it at about 17.2. A failure to hold 17.2 starts to open up more weakness down below. That's been the case ever since we broke through that level. So again, how much weakness do we see this week, and can bulls shake it off? Now, currently, if price can push through the 1680 level intraday, that could open up some upside from an intraday perspective, perhaps get as high 1720 and back to the 1780 zone. Again, this market inside a narrow box here with an upward bias, so when you test the bottom end of that box, it can be a trap for a rotation back higher. Taking a look here at crude oil. Crude oil right now down about 0.8%, but remains on a path higher at the moment. We do have these two major extremes that have developed here, that strong pivot high here, this strong pivot low down here, and we're now inside that box with an upward bias. Now again, this market really has wanted nothing to do with prices above 79 and especially 80 lately. Every rotation into that zone has been rejected really since November. If you look back here, here's 79s right here. Bring it back ever since that time right there. That's the first week of November. Price dropped away from it. November dropped away from it here and here again, there, and now pulling back from it here. Now overall, we have a rounded bottom developing with softer rounded higher lows on the round side over here, and the rim of the pattern right here where this thing can really break out, that still remains around 79. And again, we could continue to mess around in this zone between 74 and 79 until this market's ready to break and go. Once it does, we're looking for a major transition day that really pushes us through 80 and perhaps takes us through 82 by the end of the day. Something like this day, but on a bullish perspective. That's really going to set the tone for expansion and open things up where we can get to 84, and then the target, key range target of 100%, which would be 91.5 up above. So the 100% target right here, and that would be the total range here measured up to that level. So 91.5 could be the ultimate upside target here as we head into June at some point. But until then, again, we could continue to build out a bit before we're ready to see that expansion. From an intraday perspective right now, currently seeing the early pullback be defended here near the previous session's midpoint. That could open things up back towards 78.25, maybe even as high as 78.50. All right, taking a look here at gold futures. Gold right now showing strength off of the 2,000 level again. 2,000 continues to be quite the area of support. You can see over here rallying off this level a couple of times, getting close to it here and rallying, finally testing it true here, getting as low as 1996.40 and then rallying. And we were looking for this thing to bounce back toward 2040 off that level, and we're there right now, 2040.9, and that could lead us even higher up the range toward 2080. This is an 80-point range right now from 2000 to 2080 with a midline at 2040, and we could continue to see a little bit of action here. As soon as it transitions to 2040, we make a move toward 2080, and that's the range. That is the range right now until proven otherwise. I've mentioned before, at some point here we'll likely get some sort of expansion from that range, similar to what happened back here, where we could get quite a bit of volatility. Until then, we're looking at further range bound action. We're right now at the center of this range with an upward bias until proven otherwise. Taking a look here at the YM. YM right now showing a little bit lower at the moment, very similar to the ES and the NQ, still inside the range as well. We do have a rising year-to-date VWAP that's coming up below, and that could provide some support if price were to drop into that area. 38,100 or so is the major market structure level there. From a short-term perspective, if we were to drop into that area, it could be a buy for another round of strength up ahead. Failure there, failure at 38K, opens up a drop and a rotation back toward 37 to 37.3. Again, that's been the idea ever since we pushed through here, but we just haven't challenged that level many times. So again, even if we were to pull back, that could be a buying opportunity until proven otherwise. From a short-term perspective here, 38,600, the level to watch. Above that level starts to open up 38,650 and perhaps up to 38,700. So again, this market remains within a bullish uptrending channel here. Any pullback could still be a buying opportunity until proven otherwise. All right, that is it for now. We'll see how this develops here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.